There you go. So anyone that's watching now will have missed the what I said I was going to do, but they'll figure it out. They will figure it out. Um, Nothing to try and so I'll try and find something that's really clean and simple. And I should have planned for this. I mean, I say this every week, but I never do. So
Well, you never know what you're catering for, I guess, do you? Sometimes that's the thing. It could be
no, yeah, I mean, someone could jump on and just throw a question in there, and you know, and you're just like, "Oof, I wasn't ready for that one." So there's never any point in planning for anything. But
no. It's better
um,
to plan sometimes. Well, at least while you're looking for it, you can sort of see what it is you're looking for.
yeah, yeah. I mean, people get a genuine, honest reply out of me at that point as well. So um, yeah, maybe something like this, maybe this. So I am recording now. Yeah, just check no one's in the waiting room. Tend to not look. No, right. So currently 4 hour. I know there's markings on my chat. I'm not going to delete them because I want people to see what I'm looking at. So as we can see, like German 40, obviously currently on the 4 hour, it's making bullish higher time frame structures. So obviously all the way from down here, puts in a high, pull back, creates new highs, and we start getting some smaller pullbacks. So 4 hour is bullish. So when we start seeing decent pullbacks, I would hope we can start to think big buys are on the card, sort of thing. Um, Now I've got this blue box marked here, so I'm just going to bar replay just about there, maybe a candle or two less. But from a previous marking up, I've got this is the 4 hour high, so obviously this is the highest point before this pullback starts. So this is a 4 hour high. I've got rules for that in a lot of my previous lives, and will be getting updated in the education in the next week or so. Hair in my eye. So I'll not, unless I run out of time, I'll sort of leave that out a little bit tonight and just sort of like fly through the process rather than the rules for each thing, unless, like I say, unless we get time. So obviously, price pulls back on the 4 hour. It doesn't take a low. It doesn't take a major low, which is way down here. So even though this is a huge pullback, takes what, March, mid-March, about 3 weeks for a pullback, and then we then take the high. So although it takes its time to actually do all this, it's just the way it is, and because of the time frame we're on. So once we sort of like price passes beyond this level line of this high here, so just below it, I mean you can't really see it on the 4 hour. So it's for me it's a 4 hour point of interest, but you can start breaking down the actual order blocks and things by looking on a lower time frame. So obviously on the 2 hour, it looks like nothing. But what I'm looking for is some imbalance. So imbalance is just something we visualize on a chart that maybe indicates a large push, and a large push in the market, whether it's down or up, means a potential big injection of money into the market. So we're sort of like along the lines of Wyckoff anyway, but I'm just going to drop through the time frames just so you can see where imbalances start to appear. So we're starting to see some form of pushes around here. So I don't really see any above this that's open. So drop down again. But this is all based around the fact that something below this level line here. I'll just extend it actually. So from that point there, where this candle closes above this line here, I'll bar replay it closer actually. Right. So from that point there, um, yeah, because something from here caught something from all this price action here caused that major high to the left to be taken. So still looking for a decent imbalance, and we on the 15 we start to see some actual imbalance, which is here. There, which so imbalance is yellow. As you see, I don't particularly see anything lower. I don't see anything particularly higher. So I'm just gonna mute you, George. You beat me to it. Yeah, so this is like the from what I can see on the 15 at least anyway, this is the lowest imbalance. There might be there's a bit down here as well, which obviously price might have come that low. It hasn't anyway. It didn't. It might still do at some point, I guess. I'll just read that message. 1 sec. Hey, so mate, yeah, welcome to the live, mate. I sort of cover all charts, mate. I don't specifically do gold, but I do look at gold as well. But I mean, gold trades the same as anything, mate. So it's not exempt from what I'm sort of showing here anyway. And I'll probably take a look a bit later on. But yeah, so obviously this is about these two are the imbalances on the 15. These are the lowest, sorry, the highest time frame where we start to see imbalances. So my point of interest for this is marked from the low and then to the start of this imbalance. Now, I don't generally like these imbalances from the overall low anyway. I don't discount them. I just don't prefer them. So, which is why I've gone to marked this one here, and obviously it's closer to the actual high that gets taken, so it's more likely that this is the one that causes the high to be taken to the left. So I'll just show it for the lads that have just joined. Yeah. So yeah, something down here is possibly the cause of this high being taken, which is a structure high. So from there, I'm just gonna turn off bar replay and then I'll replay it before it touches the zone. So just do it down there. Jump onto the 15. People are messaging me. So what we have from then, we've got reasons why we might want to buy from this zone. So what I would recommend at that point is you would set an alert at the top of this box, and you could even jump down on the lower time frames, set alerts at lower time frame imbalances, as they are, because I believe imbalances are where the big orders hit the market. That's generally what the market's aiming for before it may turn around. So, like I say, you can mark the lower time frames and set alerts on them or just before. It's not necessary to do that, because even though price comes down into our zone, we're still waiting for breaks of structure to the upside if we are looking for buys. So basically, once price gets into here, obviously your alert would go on off at the open of the box. You would open up, if depending on what time frame you're looking to trade off, you would be looking for a break to the upside. So obviously on here, I've got it marked for up here, purely because I imagine the 1 minute was a bit difficult to read. We have a structure form in here, so as you can see, price is trending downwards, making lower highs, lower lows. Yeah, so it trends down, makes a low, high, eventually comes down here. So up here, setting a alert, drawing a level line, setting an alert, and waiting for that to be broken is what I would always recommend, because there's no, obviously you could just set a pending on this box when it hits. We don't know if it's just going to plow straight through. So price could literally come in from here, plow straight through our zone. We don't know. Or what it could do is it could I'll just change that color, sorry. Do that red. Change it thicker. Yeah, so it might do that. We don't know. So this is why I always wait for a break in the direction that we want to trade. So lay it up here, level line, because what we would want to see is we would ideally see a break price come up above that, and then we'd want it to come back down and mitigate an imbalance in this leg that basically causes this high to be taken. So this is this break to the upside and then coming back and mitigating the order block is exactly the same. So this would be an entry one because we'll be looking for something on like the minute or something for an entry. But if there was an imbalance in this leg, say like there was an imbalance just above that zone, and that was the order block that created the imbalance, that would be the entry. It's the exact same process of what we covered here. So this would be this 4 hour point of interest is basically the same principle as what would be the entry imbalance. The process is the same. This is what caused this high to be taken, so it's high probability. It's just because it's such a high time frame, I've then decided to obviously wait for a lower time frame confirmation. And like I say, I like to wait for that confirmation purely because, like I say, it could smash through. It could take the high, which it's obviously showing there. Let me just make that different color, thicker. Sorry, turn that orange as well. Yeah, so it could smash through the point of interest. It could take the high and then come back and mitigate and what would be an entry because that break in that high would be my last confirmation. It's done everything else I'd need it to, or it could mitigate this imbalance where it's turned from. It could mitigate something in this high, and then it could take the low. They're likely the three options once it hits this point, and the only one that gives me the confidence to take a buy would be that it takes that high. Whereas these two, I'll change them color actually. These two red ones, obviously, if price was to have followed them, are just trending downwards, so it's a downtrend. It's just continuation to the downside, which means there'd be no buys set up for me. This orange one, like I say, it shows that it takes the high that I'd be looking for, comes back and mitigates something. Don't want to do that one. So I believe it does do that. Just delete some of these markings because they're not actually the markings that I had for the trade. There you go. It breaks the high at that point. So from there, it would be time to basically just look for an imbalance for an entry. You want an imbalance to be filled to tag an entry. Well, the order block becomes the entry plus spreads, things like that. So yeah, I'll just recap that up to this stage, just so if there's any newer people watching they can see. So structure, 4 hour structure, bullish. We figured that out from drawing obviously the red lines. We've identified why this order block here might have been a good place to stick an alert on, and why we would mark it up and how we've marked it up. So say 15 minutes, we found some imbalance down here and down here, obviously, which is what it's actually tapped and mitigated. We've waited for price to come into it. It's shown signs of bullish intent. So obviously with structure, once it takes the high, which it's done here, it'll go so far past. We don't always know where to, but once we start seeing pullbacks, which is what happens here. Once it pulls so far back, we can start thinking about buys again. And what will determine where it reverses from, like I say, is rules that we make for, like say, this order block. It's what causes high to be taken. There'll be good imbalances in there that it's filled. There's probably not too much below it that it's interested in, or at least for now. And I mean, I don't really see any liquidity down here that I think it would be tempted for anyway. I'm not saying there isn't, but I don't really see any trend lines. I don't think that would. Didn't want to do that one. Yeah, there's no like major equal lows or anything down there that I think price would come for. So this here is this blue zone basically is a prime area for buys. So from there, obviously it breaks above highs. We get a couple of different possible opportunities. So obviously you can see this is the market close. It closes on a nighttime on thingy. It basically fills that. Market gaps are considered imbalance as far as I can tell. So it's filled that, it's gone, and then it's gone and done its thing, you know. So there's possible entry there. Obviously, there's another from that there. Obviously, we start getting confirmations of other time frame highs. So, where are we? So, if you can see the orange structure here, it's zigzagging up. It breaks below here. Obviously, this taps fills the imbalance. It takes this high here. So we get a little bit of bearish price action here. We then get another little confirmation that we might turn bullish, and then price after it does that, it comes back, fills another imbalance low in this leg. I think we've got a real possibility. That might be very wrong, but I mean it might still come lower in here still, because obviously this is still the current 4 hour structure range. So if we are going to stay bullish, uh, yeah, if we're going to stay bullish, price will not come below this red box as far as I'm concerned. And if it does, then I reckon we're 4 hour bearish for a period of time until it comes lower to get whatever it wants. I mean, there's market cap there, it might eventually come that low, but at the minute we're still 4 hour bullish. We are currently, I think we're 15-minute bearish at the minute as well. Like I say, because we've got a 15-minute structure under here. Just turn that so you can see it better. So yeah, 15-minute bullish for here. Then we turn bearish because we've taken this 15-minute low. So when that closes below there, we get a 15-minute break to the downside. There's that break in the 15-minute there. I mean, imagine George will probably speak in a minute and tell that he could probably caught this. But because we 15-minute break to downside here, so 15-minute bearish, we come up, we mitigate something high up in this 15-minute structure. So you can take both sides of the market, buys and sells. So we've got 15-minute point of interest there because this is obviously there's imbalance here. Price comes up, fills the imbalance into the order block in whatever all this is. Probably the highest imbalance in all this price action, maybe. And then it probably does a 1-minute breaker structure somewhere under here. So would have been there's likely a good setup in this. Maybe under there. Let me just cancel that. Hmm. Can't decide where the 1 minute structure is. So obviously this orange line that you can see is how I've got my 15-minute marked. There is this structure going on as well. There's the arrow. Yeah. There's I just posted it in the chat. So we maybe get a change of character there. So there's that structure. That might be the 1 minute. So we maybe get a 1 minute break under here. I'm also tempted by maybe something a bit closer. So I'll check your drawing in a minute, George, mate. I'm just I'm wondering if we've got a smaller structure going on as well. So we have possibly high, a low, low, high, no, high, low, 10 off the magnet. Lower, high, high, low, high, high. Yeah, no, that don't work. I'm glad I checked that. Yeah, I think that's this one here is the actual one, what I'd class as the 1 minute low. This low here. I had a maybe. I was quite tempted by if of this last. I mean, that's probably a good thing to cover. So one of the rules for the structure is obviously this at this point, like this low's put in. So as it's trending upwards as I drew, then this structure. So I'll just redraw that last structure again so you can see. So that there, I'll go away. That last structure there, obviously, it's a real big push. It was trending upwards on a smaller structure up until that point, and then obviously we get this huge push up. So what changed my mind was that that's a high, that's the low. So this push here is the valid smaller structure until the high or the low is taken. And obviously this just mitigates it and then takes the high at that point. So at this point here, where this little candles in there, whatever they are, this is the. So if I draw a box from that to there, and I don't extend it, yep, that high and that low is that means that this structure here is the valid structure until basically price comes out of this box here, as you can see. So level across. Only after this price pops out is when I would consider the that basically the new low had been put in. So which obviously as soon as these pop out there, that for me confirms that this structure is the new lower time frame low. So yeah, this bigger structure is what I'm saying is the 1 minute. I don't know if that means that there's been an entry for this yet or not. Um, just replay it. Yeah, so we've had a 1 minute, new 1 minute low taken. So we're 1 minute bearish. Maybe possibly that. Obviously, this might have mitigated something in there. So obviously, this is the current 1 minute bearish leg on German 40. If price comes up to into here, whatever this is, I'm sure that was a news 8, Tuesday 8. But if something comes up into there and gives us a signal that it might want to continue lower, because like I say, we are at that point we are 15-minute bearish still, because obviously we've had the 15-minute breaks of downside there, mitigated something major high up in here. The only thing that would put me off is price could come for something up in here still, because this is what I think the 1 minute break is. So somewhere above. Let me just replay that. So from where the candles are there, price is very likely to want to come and tag something up in all this. I mean, like that looks like a good little area. A bit of what looks to be imbalance in there. Obviously, we'd have to look on the lower time frames to double check. Market closed there, so it might come for that gap. Obviously, we've still got stuff even higher, so I'm not checking through it all now in a way, but yeah, there's a real good chance that price will come up for something in all this price leg as it is at the minute. Like I say, price has done a little retracement. I've got it marked as a 1 minute structure here. Whether it's right or not will be decided by what happens from here, I guess. Um, but yeah, we're bearish as far as I can tell. Like I say, if this is the right structure, and I think it probably is, then it would be nice to see price pop up into, like I say, somewhere in here, because this is so from the high, measure from a low. Yeah, if price pops way up high into this top 25% zone, fills an imbalance in this, and then gives us like a little 1 minute structure break to the downside. I mean, it won't be an actual 1 minute if this is the 1 minute structure. It'll be like one of these little squiggles. You know, if you was to zoom in, I call it 1 minute. It's maybe not, depending on what the actual rest is doing. But as you can see, from this big down arrow, we get little lower time frame trends as well. So obviously we get a low there, we get a pullback, we get a low, we break it here. So there's a little change of character above there that comes back, mitigates something in there, the order block that causes the mini change. Yeah. So I'd like to see something like that. So I'd like to see what happens here, the opposite of. Say we get a just go from there to there. So I'll change this color in a minute so you can see better. Almost. Let's change that color so you can see. Orange. I'll get rid of this now in a way. Yeah, so as you'll see, you get a break along there. Break of structure. And then it comes back and it tags into, like I say, the order block that likely causes it. This will probably be visible on a lower time frame. Delete that a minute. Yeah. This here still follows structure, I guess. So obviously this is a big deep pullback. It doesn't if this structure I've just drawn is like a good lower time, 1 minute, sub 1 minute, whatever you want to say, it still follows structure rules. So makes a high from there, like I say, because that's the high. We get a continuation of price, pulled back, and then obviously it's not taken the high or the low yet, so it comes very deep into it again. Or I would think we shouldn't, if it's going to turn like sub lower time frame bullish, like I say, it's probably going to do it from somewhere around here. But we have maybe made liquidity here as well, so this is when we can add liquidity into it to. It's not the cleanest, so no, not good enough for me. It might be a feed issue though. So if on other feeds this is a perfect three-touch trend line, I would really expect price to come in at least pass beyond the line so you can extend that liquidity to take. If that's better on a different feed, then we might well see something like sweep, maybe even lower into this zone that I marked earlier a minute ago. Then we might start breaking to the upside and creating new higher highs, higher lows. I'm just going to read George's chart, see what he's got. Ah, so you still think it's coming a touch lower, George? I mean, I can't disagree, mate. Oh, is that sorry, mate? That trend line you just put up, is that the same one but on a different feed?
Yeah, it's the same one.
Yeah, yeah. See, there you go. So yeah, the feeds count. Like I say, it's not the best on mine. So yeah, I'm expecting that to come lower still then. But like I say, this might have. I mean, I don't know what's in that, so that might well have been the imbalance fill that it was after. I mean, it's until we get into like the nitty gritty, we'll never know, I guess. But nothing looks fantastic there, to be fair. Um, yeah, maybe something to that, but nothing else stands out. So, but I mean, it might have left these imbalances for when it takes if it takes that trend line liquidity, and then it might have left some of these like imbalances that we're trying to find now for that phase of the trade. So, because I believe all price is trying to do is uh, either pass beyond liquidity, so take liquidity or rebalance the market. So if it's leaving him, if it left loads of these imbalances here and there's stuff above, like I say, it will use them imbalances to drag the market up after it's done what it wants to do lower down, if that's where it's going to go first. Yeah, but yeah, like I say, if that's a good trend line on other feeds, I think it will come down. I'm just going to have a quick look at your drawing again, George, because I just want to see where you think it's coming to. You've got 15, you're 15 minutes lower. Delete this. So that's there's market close there as well. So I think your zone's marked here in it, George. I think that's how George has got his zone marked. I think there's possibly still a little bit of market open gap here as well. So from that candle close, because that's where the market closed, because it's a green candle, and this is what it's filled to. So there's possibly still that to fill as well. Should turn that red actually, because it is a point of interest for And then you start to see, obviously, it's a 4:15 one move. So I mean, yeah, I mean, it coming there, George, makes real sense now that I've changed my box colours. um, yeah, don't see any other liquidity. That might want to drag it down, but don't mean it's not there. Hmm. Is there any questions, by the way, guys? I'm just guessing not. So I'm just checking, see if there's any more liquidity. Obviously, it's gonna take this at some point. This littler one, I was just trying to see if there was anything that once it takes that it's you might want to come for.
I think I've got some liquidity on the 4 hour at the bottom. If I'm right, just to check if I'm getting it right, that is.
Yeah.
From the 19th of June, the low on the 19th of June goes across. Is that what you was looking at then?
May. Yeah, it was, mate. Yeah, it don't quite line up. So obviously, if this is your first session on EMEA, I'm very particular about me trend lines. So they've got to be a minimum of 3 touches. And like I said, this one here that I drew, that's drawn on my chart, mate, I don't accept that because it's not price. The middle touch is just through it. So I like 3 perfect touches. So this, but like I say, this might be just on my feed. So on George's, this shows us 3 perfect touches. He's put it in the supply chat, mate. So go have a look at his last image. But yeah, just on my feed, like I say, it's worth checking other feeds if you're going to put your own money on it. But yeah, if I didn't check it, I would write this off because I wanted that to be another perfect touch. So yeah, very very particular. So, but I do that because if we if we're trying to find purely the best setups, then I'm trying to remove a lot of the guesswork. So if we think purely for this Pepperstone feed, then that's not a good enough trend line for me. It's if it's not good enough and it's not 3 perfect touches, then to me, I'm saying that's not liquidity because it's not obvious enough. So if we just focus on the trend lines that are perfect, then we know it's liquidity. There's no messing around. There's no ifs and buts. We know it's right. It's bang on. And obviously you can start to. I mean that was a touch short anyway. To see if I can find an actual good example for you. But I mean, if it's something you end up going and testing and things like that, you'll maybe see that the ones that are perfect tend to be great moves anyway. Like I say, because you're not messing around at that point. So again, not the best. Good one here, this red one. So touch, touch, touch. Price sweeps, and then obviously eventually it sells off after that. So what confirmations are beyond this is obviously if it's how I trade, like I say, I would have said you want a break as soon as it starts showing signs of breaks to the downside. You'd be looking for a mitigation of an order block. So like once this closing below here taps up into this, on the lower there might be like an order block in here, which means you would catch all of that move, possibly all that move. And again, 1, 2, 3 perfect touches, price goes just past it, and then we start seeing breaks to the upside. So price then taps. There's likely an entry somewhere in there. Yeah, so 3 real nice touches. These are where, like I say, there's just 2 in that, possibly 1 here as well. You start to see that price sweeps it, starts breaking below again. So they're all often quite linked as well. So even just on the 15-minute there, if you mark that, and you said that was an entry zone, like so you got 3 good touches here. So build up liquidity, sweep, break to the downside because it closes below this here. Well, it goes below, so that's a breaker structure under here. And then it just comes, fills an imbalance into an order block, and then sells off. Yeah. So obviously it happens here. 3 good touches. Well, 1, 2. Screen's froze. Yeah. So 1, 2, 3. I mean, I don't imagine that's going to get hit anytime soon. But as you see, it's 3 good touches. Pretty much on the money, I believe. Yeah. To the dot. So very likely price might come and tag that at some point. Again, 3 touches, 1, 2, 3. Which obviously this trend line here that I've just highlighted now, I'll turn it red. So price sweeps it, and then we start seeing breaks to the upside. This was what we was originally talking about earlier, break to the upside. The price is, like I say, it fills this imbalance here, and then goes and does a few hundred pips or whatever that is. And obviously, if you know structure, then you'd know that somewhere up here is where you would likely want to sell from anyway. So if you'd have set an entry on this imbalance being filled, it's that yellow line. Obviously, you said there'll be an order block for you to actually mark it off, but let's say you just did it somewhere like that, it was kind of something like that. If you know that price is likely to react out of somewhere here for the sell, I mean, it's relatively small for this live, but you sort of get the idea that all these real good trend lines and sweeps are they tend to be the better moves. So, like I say, we've got 3 good touches here, little mini sweep. Obviously, breaks to the downside here, breaks below there with this one, comes back, fills very high up. So, another good reason for a sell. You get a few hundred pips in that. Obviously, this isn't a best trend line because it's short, but yeah, that's basically why I'm very particular with me trend lines, mate. It just takes away a lot of the guesswork and the ifs and buts. So, um, but like I say, this one looks to be a Pepperstone feed thing. So often worth checking a couple of feeds, I guess. If you was gonna wait for that to be swept and then you'd started seeing breaks to the upside, I would have writ it off if I didn't see George's. Um, but like I say, it's worth checking a couple, especially if you're going to put your own money on it. So definitely do that. Is there any questions, guys? Or shall I just do a quick recap of the whole thing and just of the process of the whole thing, what we covered there? Give it a sec. Yeah, I'll do a quick recap then. So when we open the chart, obviously if this was the trade we was looking for, so we've got a 4 hour or higher time frame structure. Just go to the 4. So we're checking 4 hour structure. We've taken the previous high. We started showing signs of pullback. We should obviously be thinking at this point of why would maybe be looking for buys. So beginning of the video, we identified why we would mark this, what is now the red box. It was blue earlier. It then taps into it, fills imbalance. So structure moved on to imbalance and points of interest. We then come back to structure because we've seen lower time frame breaks to the upside. We're then looking for imbalance again as a possible entry zone. And then obviously the next structure is what we are. Other structures is what we are sort of setting what would possibly set our targets to. So this would be, that's the entry there. Obviously we marked this because obviously we've worked with a 4 hour originally. We've got the 15 minute that runs inside of the 4 hour legs. So this 4 hour whole leg here is made up of 1 swing, 2 swing, 3 swings on the 15 on this occasion. So once price breaks below this low here, obviously the entry comes as it takes that 15 minute low, which means obviously price would likely want to come up and mitigate whatever caused this 15 minute break to the downside to then continue to the downside. So good reasons for points of interest, take profits to be somewhere up in here. Obviously this imbalance fill, and then obviously we get lower time frame structures as confirmations for the 15 minute maybe turning around as well. So there we go. Better. Yeah, so obviously this is what we've got as 15 minutes. We get a breakdown here. Oh, does that kick me out?